the American middle class is finally starting to see the benefits from our booming economy. At least that's according to the White House, who just put out a statement saying that not only is our economy booming faster than expected, but this booming economy is especially helping the middle class. Now, the reason why the White House put out the statement, which I'll link for you down in the description, is because we just got the latest report, economic report, which showed how our economy grew in the end of 2023. And what it said is that our economy grew faster than expected. And because our economy is growing faster than expected, this is where many people, including the White House, are saying that this is the best economy ever for the American middle class. But there are some kind of dissenting opinions here, because some people feel that this economy is hurting the average person because of the high inflation, or the remnants of the high inflation, because of the higher interest rates, and because of how much asset prices have risen, making it more difficult for people starting their wealth journey to actually start accumulating wealth today. So what I want to go over this video is, number one, what happened in this latest economic report? And then number two, why is the White House saying that this is such a strong economy, especially for the American middle class? So starting with the latest economic report, what it said is that the United States economy in the last quarter of 2023 grew by 3.3%. The reason why that's such an important number is because the expectations were that our economy was going to grow by just 2%. In other words, that our economy grew much faster than expected. Now, this is where a lot of people are thinking about what's going to happen in 2024, because we are seeing inflation cool down. We're still seeing high interest rates. And now the question is, are interest rates going to fall? And is inflation going to continue to fall? Now, I'm not going to go over my 2024 projections in this video. I am hosting a workshop on February 6th, a wealth building workshop, where I'll be going over what I think is going to be coming in the economy and how you can use what's coming in the economy to really build wealth in 2024. I'll be going over how you can start building a financial plan, how you can start generating cash flow, how you can start using your money smartly. It's a completely free workshop, and it's going to be live. I'm going to have 2 live workshops on February 6th, one in the morning, one in the evening. So if you'd like to join me in my first ever live wealth building workshop, I got the link to how you can join me down in the description below. But this is where now it's important to understand that this strong economy is good in that businesses are making more profits, and that the stock market has been booming, and that asset prices have been booming. But the consequence is, well, if the economy is still booming, does that impact inflation? And why is the economy booming in the first place? And the reason why we saw such a big economic boom in the end of 2023, according to the data, has to do with 2 reasons. Reason number 1 is consumer spending was stronger than expected. And reason number 2 is federal spending, government spending was stronger than expected. So we start with consumer spending. What does that mean? That means that Americans spent more money than what people expected. Now, we already know that Americans are currently drowning in debt. We have the largest amount of credit card debt ever. We have the largest amount of auto loan debt than ever. Americans are drowning in debt, and in the last quarter of 2023, Americans spent more money than people expected, which translates to people went deeper into debt than what people expected. Again, that's good for the economy today in the short term, but that creates risks and issues because eventually that spending is going to have to cool down. But it also has to do with federal spending, government spending, because in the last part of 2023, it turns out the government, the United States government and state governments, spent more money than what was expected. Now, what does that mean? Well, that means that there was more economic stimulus from the federal level. And the reason why that's so significant is because the United States government has one source of income, and that source of income is you, taxpayers, through tax dollars. So now let's think about this. The United States government is running a national deficit and a national debt. That means every year for the last number of decades, the United States government has been spending more money than what they bring in. And because they keep spending more money than what they bring in, their national debt keeps accumulating year after year after year, minute after minute after minute. Well, if the government is spending more money than what was expected, that means they also went deeper into debt than what was expected. So if the government has to go deeper into debt to finance their spending, whether it's an infrastructure package, whether it's for a military package, whether it's for any sort of welfare package, all of these things have a cost. And the funding of that cost has to come from somewhere. Well, if they don't get that money from tax dollars, then they have to get that money from somewhere else. Now, they can borrow this money, or they can just have this money printed. And the way they can have this money printed is by borrowing the money from the Federal Reserve Bank, the central bank of the United States. But if you think about that, if the Federal Reserve Bank is printing money to lend it to the United States, what does that do? Well, these are inflationary issues. See, when the Federal Reserve Bank was printing money to fund the government spending in 2020 and 2021, that created a big stimulus in our economy. I mean, we saw huge economic gains in 2020 and 2021, partially or much in part to all this money printing. Well, what was the consequence to that? We started to see the high inflation in 2021 and 2022 and even in 2023. So now when we talk about government spending boosting the economy, that's great news on an economic front. But the consequence to that is anytime the government spends more money than they have, that has a inflationary effect as well. And we know that the inflationary effect takes time to see. And this is coming at a time where, of course, inflation is still not down to the Federal Reserve Bank's target levels of 2% inflation. That's why these things are important to understand because, yeah, a good economic report is great, especially in the short term, but there's also the inflationary factor that we have to think about now because prior to 2020, that was never really an issue. When we had the 2008 crash and the government was spending money, the Federal Reserve Bank was cutting interest rates, the Federal Reserve Bank was doing quantitative easing. Well, inflation wasn't that big of a concern because leading up to that crash, there was no inflationary issue. Same in 2000 when the 2000 dot-com bubble bursted. Well, today, it's the opposite. We already have an inflationary issue. And so now when you're doing this quantitative easing, you're doing the government spending, it stimulates the economy, but there's consequences to that as well, especially when you're already dealing with the high inflation. But if we ignore that for a second, let's talk about now the government's response to the economic reports. First, Janet Yellen went out and she spoke publicly. She's a Treasury Secretary in the United States. And what she said is, quote, "I see this economic report as a good thing, because it's reflective of strong and healthy spending and productivity improvements and not, most likely, creating an inflationary challenge." Now, interesting that she says that this economic report is probably not creating an inflationary challenge. Why would she say that? Because there are potential concerns and worries of an inflationary challenge. And the reason why there's an inflationary challenge is because of what I just talked about. Number one is because of the government spending, and then number two is because if we continue to see these hot economic reports, it puts more pressure on the Federal Reserve Bank to not cut interest rates. And this creates an interesting dynamic because on one hand, the Federal Reserve Bank wants to cut interest rates because they want to stimulate the economy and there's a lot of pressure on them to cut interest rates from people, the government, and everyone else. But when you have such a strong economy and you start cutting interest rates, what does that do? That makes borrowing money cheaper. That means more people will go into debt, more businesses would borrow money, and that would create more stimulus, which would make the hot economy even stronger, which could create more inflationary issues. And so you can start to see the pressure on the Federal Reserve Bank when you start to see these stronger than expected economic reports, especially when inflation is still not down to target levels. So it creates those inflationary questions. But then Treasury Secretary Janet Yellen continued down this win for the economic people and the economic system. What she said was, the middle class is winning because this, quote, story of the middle class is not separate from the state of the economy. It's at the heart of it. And by the middle class, I don't mean a narrow or fixed group. I mean workers across industries and corporations, from firefighters to nurses to factory workers, that the middle class is now winning. And the reason why is because as the economy is winning, the middle class is winning. And she's right. When you have a growing economy, that generally benefits the middle class. But the interesting thing about this economy is the strong economy is also being kind of negatively hurt through the compounding inflation. Today, we're seeing much lower inflation than we saw 12 to 18 months ago. That is a fact. However, the inflation that we saw 12, 24 months ago didn't go away. Inflation compounds on top of each other. So the inflation that we saw in 2021 was there. Then we saw high inflation in 2022. That built on top of the 2021 inflation. Then we saw high inflation in 2023. That built on top of the 2022 inflation and on top of the 2021 inflation. And over that period of high inflation, wage growth only outpaced inflation towards the tail end of 2023, which meant for the average person, out of those 2.5 years of high inflation, only a period of it had time where your income was outgrowing inflation. So now here you are today, and we're still seeing higher than expected inflation. We're still seeing more than the target inflation, which means that the prices of things are still rising quickly. Now, maybe we'll find out very soon in the next coming days, inflation has cooled down more. Maybe it is still high, but the average person is still paying the price for the high inflation for the last 2 years because the prices of things have risen so quickly. Groceries are much more expensive today than they were a couple of years ago. The average person is comfortably paying pretty close to twice as much for their groceries today than they were just a few years ago, but the average person has not seen a doubling in their incomes. The average person, if you go out to buy a home today, is going to pay 50 to 70% more today on their monthly payments than they were just a few years ago. But that same average person is not making 50 to 70% more today. The average person has significantly more costs today than they did just a few years ago, but the average person's incomes have not risen fast enough. Now, what does this mean? This is why financial education is so important, because the people who have benefited from this are the asset owners. Guess what? If you were buying stocks or real estate in the last few years, you saw a lot of benefit. And the investors that were financially educated to own assets and buy assets saw a lot of gains, versus the people that didn't. Now, of course, there are cycles in asset classes. Stocks go up and down. Housing prices go up and down. Asset prices go up and down. But the reason why so many people feel left out in this economy, particularly today, even when we're in this economic boom, is because of the inflation that we have seen over the last few years. So yes, we are still seeing the economy boom. It's booming because people are spending money like crazy. It's booming because the government is spending money like crazy. That's good for the economy in the short term. There's consequences to that, of course. But generally, when you see these types of economic booms, people feel the benefits of these economic booms. However, in this particular instance, many people are not feeling the benefits of this because of the impacts of the inflation that we've seen over the last number of years. And this is what so many people are forgetting about and not understanding. Wow, the economy is booming. Why am I not feeling it? Why am I struggling more today than I was a few years ago? Because generally, when the economy is booming, more and more people feel like they're winning. But strangely, in this economy, you're not seeing that. And the reason why is because of the inflationary issues and the lack of financial education, which is why it is so important for you to understand what's happening. That way you can take better care of yourself, your family, and your community by building your financial education. That way you can use your money as a tool and also understand markets go up, markets go down. You don't want to be the person that's chasing. You want to be the person that has a smart investing strategy, that understands how to put your money to work, that understands how you can build wealth, and understands that no market can go up forever, no market can go down forever. That way you don't chase, but you have the financial education to understand how you can build wealth no matter what is going on in the economy. And with that, I'll see you tomorrow.